Thanks so much for joining me today.
Hey, thanks for having me.
Well, I'm so excited to talk to you about probably the hottest topic in banking right now, especially for the consumer commercial lending side, which is AI. And I know you've got the chops in a way that I think many bankers feel a little out of their depth on or a little scared about. You've got an unusual resume for a senior vice president at a bank. Tell me about your career and how you came to Fifth Third.
Sure. So I got my start in AI in the late 90s.
Oh, what was AI like then?
Well, a lot of rules,
Okay.
a lot of search because the internet was new. And we kind of found ways of taking digital information and making it more accessible to people.
Yeah.
And helping them navigate sort of their preferences and understanding how to make recommendations. So there was a lot of exciting work at the time, especially in this new area called software agents.
Oh, wow. In the 90s?
In the 90s, yes. So we were thinking about, well, how do we split the work across the computer, the AI, and the human way back then? So it's kind of cool to see a lot of those things start to come to fruition now.
You're kind of blowing my mind because I remember the computers that existed in the 90s. And so to even think that the conversations we're having around agentic AI would have been any type of work that AI agents could do, they could do it on that computer with the dial-up ringing in the background.
It's true. It's true. It was pretty basic back then, but the seeds were planted.
So starting in the 90s, how did your AI work lead you to Fifth Third?
Yeah, so I did a series after graduate school. I did a PhD in AI, and afterwards we started a company selling AI-enabled knowledge management software to businesses. Sold that company. I moved to California, did another company, and a series of companies all focused on bringing AI to large corporations to help them with productivity or to help them manage their advertising, make more money from the internet, et cetera. And then a friend of mine called up and said, hey, I'm moving to LA and there's this fintech that's got this really killer enterprise story. Do you want to come take a look? And I was like, well, I'm not really looking for a job. And I don't really know anything about financial services, but I suppose it sounds like a pretty good idea to use AI to help with improve the accuracy of underwriting. What a great idea. What a great opportunity. And so I joined.
Sure. And then, so that's where you learn about financial services. And then eventually, Fifth Third is like, we're all in on AI, or what's the deal there?
Well, so at Zest AI, the company that I was at before Fifth Third,
sure.
we built credit models using machine learning to help better underwrite consumers. And we had to solve a bunch of different regulatory problems along the way. How to make the models transparent, how to make them fair, et cetera. And so we had a great run, hundreds of models out in production, trillions of dollars underwritten. And as we sort of transitioned the company to new owners, I was looking at sort of what's my next chapter going to be.
Totally.
And so I reached out to some of my contacts, and Fifth Third was like, wait a second, you should really come here and help us transform the way that we do credit using this new technology.
So before we drill down into bank-specific use cases, how do you think about AI in financial services, given that you are no stranger to this technology? And I feel like banks they're more open to it, but they're also, it feels like a little bit, but maybe behind on some of the technology capabilities, and they're playing catch up and they're trying to see what everyone else is doing.
Well, so to a certain extent, banks have been ahead for a long time.
Oh, interesting.
So electronic transactions, fraud monitoring, transaction fraud, all real-time AI applications. So today, as you swipe your credit card, AI models are running on that transaction to make sure that it was really you and that you meant to do it. So in a lot of ways, they've been ahead, but they also have a very robust risk management practice.
Sure.
And risk managers need to be educated and brought along to feel comfortable in approving the use of new technologies in critical regulated uses where there's a lot of financial outcome at stake.
Yeah.
And I think a lot of times what happens is AI developers or fintechs will sort of walk into the room not appreciating all of the documentation and all of the processes that are in place that to protect the bank, its consumers, and the financial system as a whole.
Right.
And say, well, why can't I just plug this AI in? It's really great. Like you should see, I've tested it on hundreds of examples. Well, the bank has kind of a higher standard. And so it's been it's easy to understand why they've been slow to adopt some of these things when the technologists themselves haven't really created that bridge to make it acceptable for them.
So what does AI usage look like at Fifth Third today? How does the bank approach this technology, and what kind of AI does it use, and where does it use it?
Yeah, so our first foray into generative AI. So the capability like ChatGPT, where it can answer questions and help you with find documents and review things, et cetera, was simply to give the workforce access.
Sure.
But in order to do that, we had to figure out how to govern it, how to set up all of the guardrails, make sure that our data wasn't inadvertently leaving and making its way into a model so that it could be trained on our proprietary information that we hold in custody for our consumers or that we're protecting for ourselves. So our first step was giving access to the knowledge workers access to Copilot. And after we did that, we started to look at what are the various uses across the enterprise. One of the biggest ones where we've seen success is in engineering.
Interesting.
At first it wasn't obvious, but just having an AI copilot that is helping you navigate the documentation, complete that next line of code, and making it so that you don't have to look everything up or remember all the names of the variables really speeds things up.
Sure.
So we've seen anywhere between 30 to 40% improvement in our IT release cycle time.
Wow.
As a result of adopting AI. But those are sort of like more productivity uses. In the business, we've also engaged in a number of experiments and AI initiatives to help drive efficiencies. One of my favorite examples there is where we have a relatively large indirect auto lending business. Over tens of billions of dollars of loans out at any given time. And people sometimes forget to pay. And it's not because they're trying to skip the bill or they have any malicious intent. They forgot to pay. And so we call them up and give them a payment reminder. Would you like to take care of this today? Of course, that conversation has to be very prescribed. It has to be very scripted in order to remain in compliance with all the regs around collections. And so we used an AI to sort of fill in for the humans. If you have people do it, it's hard to hire 1,000 people to make calls only between 8 o'clock and 9 o'clock in the morning when people are available, and then have them go off and do something else and come back at the end of the day when people are available again.
Yeah.
So you end up kind of smearing the calls across the day, and not everybody gets reached. Which is a missed opportunity to help a consumer get back on track. With the AI models, we can deploy thousands of virtual call center agents to make those outbound calls a second. And so we could just do way more reach outs than we would normally be able to.
Yeah.
And because we're able to put them like right at the time when people are normally available, our right party contact rate spiked.
Yeah.
So you could see lots of different uses for AI across the enterprise. Another great example.
Yeah, totally.
We process around 20 million pieces of paper a month.
Oh my goodness.
People send bills. They have statements. We have large loan facilities that we participate in, and the rate gets set based on a floating rate number. We need to know how much interest to expect. So we get all these pieces of paper. We can use AI to read the piece of paper, extract information out of it, and then critically put it in front of a human to review.
Yes.
Because it might be wrong.
Right.
But we were able to get our classification accuracy all the way up past 97%
Yeah.
using AI models that were specifically fine-tuned for our use cases.
Oh, that's really interesting. And I think as I've been thinking about where I can use AI more in my workflow, I've almost had to like break down every single thing I do, not as like one complete work stream, but into like the discrete tasks. And I love that, in this case with, the collections, why does it matter so much that someone gets a phone call on a certain day between a certain time? And you're like, well, that could be one day before it's due or one day after it's due. And so getting that contact and getting it right when it stops the loan from getting maybe more delinquent.
Right.
Right. And so you kind of remove this like limitation of like, and you've addressed why does it matter so much that we try to get as many of these calls completed on the days they need to be completed at the times that they need to be completed.
Right. Because people have work.
Right.
They have family obligations and we're only allowed to call during certain hours.
Yeah.
So it sort of boxes you in and limits your effectiveness if you aren't able to really scale.
Yeah.
Which the AI allows you to do.
Well, I wanted to talk about, I think maybe one of the perceived third rails in banking and AI, which is credit applications.
Yeah.
I know that there are, for a lot of people, there might be places where a bank would not want to use AI at all. And so sometimes having these conversations can really like trigger that response.
Sure. Yeah.
But, in my example, again, thinking about all of my workflow as a discrete task.
Yeah, right.
And, there's places where I really wouldn't want any AI to show up in my workflow. And there's plenty of places where apparently I would love for an AI assistant to help me. So let's talk a little about AI and credit. What kinds of loan types make more sense for AI and why? And then beyond like asset classes, where in the life cycle of a loan does AI make sense?
Yeah. So if you think about the different asset classes, they have different kind of risk profiles. So if you have a secured auto loan and you can go and repossess the car, there's a recovery rate that you can kind of build in. What's interesting about those sort of secured lending cases is that the valuation of the asset ends up being a really interesting or important input into their risk decision. So if you got a long-term loan and your asset is depreciating rapidly, like that creates a potential problem. But I've seen AI successfully applied in credit risk underwriting across all of those asset classes. From unsecured personal loans, credit cards, secured auto loans, mortgage, and home equity. So, and every time we replace a traditional model, one that was based on less sophisticated math with, say, a machine learning model that uses more data and better math to make more accurate predictions, we see maybe a 15 to 20% increase in approval rate with level risk. So we're able to make this switch. It doesn't come for free. You have to do a bunch of compliance work along the way.
You just waived all of more math, more data.
Exactly.
It's not easy.
But it's not, right? Because you have to plumb the data into the origination system. You have to get the data organized before you start the project. There's a bunch of steps to it. And you have to have the techniques to be able to make the model transparent to regulators. To be able to explain every decision to a consumer, because we have to send notices that tell them why they were denied And so there's sort of a higher bar. You can't just sort of take the out of the box machine learning algorithm and just apply it to credit. You have to do a bunch of extra work to make it actually work for the bank. But when we do that, we're able to be more inclusive because we're able to recognize borrowers that have different characteristics from traditional ones. People who might be new to the country, who have a rich deposit history and that make great credit risks, or people that maybe would have been overlooked by a traditional credit score. And so by enabling the process to use more data, we can make better decisions, which means ultimately we're accepting more people and we're managing our risk.
So it sounds like in what you just described, you're talking about expanding your credit box, maybe bringing in or maybe pre-approving or approving from maybe a different amount or greater amount. Are there other areas in the credit lifecycle where, especially in the consumer side, where AI is a great tool
Absolutely. So even in the very front end, to identifying people that you want to market to.
Sure.
So, people get these solicitations, and we've probably seen them in the mail.
I've received them from Fifth Third. Yes, I couldn't tell you where in Nashville there is a Fifth Third branch, but they found me.
Well, we'll take your money no matter where it is. The key is identifying people who are in a need state or who are going to be good customers that are going to stay with the bank, that are going to benefit from the relationship that they have with their banker, and also deepen their relationship through other products. So you can use AI and all the data that we have about consumers to help make those predictions. But in lending, again, we have a higher bar. So we have to make sure that we're not inadvertently soliciting only men, for example. We have to make sure that we're being fair to all the protected groups. So there's definitely a level of care that's required in marketing a lending product that isn't necessarily required for other marketing activities, which is why financial services ends up being hard.
Yes.
But also enjoyable from my perspective. So that's on the front end. But then once we have someone in and they've taken out a credit card, et cetera, we can use AI to look for red flags, see if there's something that we need to do to help make sure that we're not creating a liability. We can look for opportunities to deepen, to move them into better products. So if they have a lot of credit card debt, and they own a home, maybe they want to take a home equity loan to consolidate some of that.
Yeah.
So that's on the account management side. And then later, if someone does forget to pay or they start to go delinquent, we need to try to prioritize our outreach efforts. So you use AI there as well.
Interesting. So, you mentioned some of the impacts that AI is having within the Fifth Third as a business, but what kind of impacts has Fifth Third seen from using AI in these lending applications? You mentioned the bigger credit box and maybe expanding who might be a good customer. Are you guys seeing any other types of measurable impacts of using AI?
Yeah. So the other aspect of it is that you can better manage the risk. So Fifth Third is targets very prime, super prime type of customers, the mass affluent.
Yeah.
Now, to a certain extent, that means that we're trying to sort through this sort of bin of mixed, sort of quality people and identify only the best of the best, the cream of the crop, right?
Yeah.
That's hard.
and everyone wants those customers.
Everybody wants those customers. And what we want is to be able to identify the people that maybe someone else passed up, but that we know are going to be great because they have a relationship with us.
Yes.
And so one of the things that we've been able to do using AI and machine learning is to take advantage of the richness of our deposit data. We have millions of households that use us as their primary checking account. So we can see the inflows and outflows. We can see whether their spending is consistent or erratic. We can see whether they're saving.
Yeah.
And because they have that relationship with us and we can see that data, we can identify people that traditional credit scores would not.
Right.
That are really good credit risks that will allow us to help them get a car so that they can go to work or to build their dream home if they need a construction loan. So those are the types of things that we're able to do because we're able to consider more data using AI.
It's funny. My entire time as a financial services reporter, sometimes people ask me personal finance questions. And one that I've gotten from, maybe some reporters I'm mentoring or some people earlier in their career is, how do I get a good credit score? How do I get a travel credit card? Because these are for prime consumers or super prime consumers. And I would love to tell them anything except if you have a parent or an adult that could make you an authorized user for a couple of years and just they keep the card for you, or, walk them through, hey, there are certain credit card companies that will sign up a college student and for $1,000 and then wait 3 years and
Right.
then wait 3 years and then you get these things.
Yeah.
And it's, I'd love for banks to kind of think a little bit more. I mean, I understand, why a college student has a hard time getting a good credit. I mean, I had to be like, hey, what if you took out thousands of dollars of student loan debt and then you just had to pay it off for 15 years? You'll have a pretty good credit score if you, as long as you make those payments.
Yeah.
And I would love for banks to be thinking about their younger consumers and how do they prepare them to be financial adults with, that are financially literate, that have like really good products that I think about, like the amount of kids that do study abroad and they need like a credit card that doesn't charge them fees.
Right.
But how would a bank know that a kid might want this card and want this very specific thing on the card?
Right.
Other than, me telling them to like ask their parents to make them an AU. And like, so if you need another application, thinking about like these like consumers who just turned 18, their cash flow data, you're in college, like, is this in your plan? Or like talk to your, to talk to the parents or something like that, right? Like,
and that's really one of
that cash flow data though, right?
Yeah, for sure. I mean, but it's also one of the reasons that we have so many relationship bankers, right? To provide that frontline customer service at the branch where you can go in and you can talk about what you need and what to do in order to get there.
Yeah.
So I think that's a sort of always going to be a key tenet of our business. But as you think to the future,
she is right,
and more people interacting digitally and sort of asking for that advice out of ChatGPT, you can imagine a world in which we would want to be able to provide a digital service like that.
Totally. So you have alluded to the higher bar that banks face when it comes to these types of technology. What does the governance framework around AI look like at a bank that's as big as Fifth Third? Like, who owns the model risk and performs oversight? What kind of documentation is really important for AI that maybe banks were producing but has taken on a special importance now?
For sure. So we like to say everyone owns the risk, right? I sit on the first line of defense. So that's the business. We have a second line of defense that reviews our work.
Okay.
And then a third line of defense that makes sure that we follow the correct procedures.
Yes.
So, but in AI, you have these different types of models. And I think it's kind of useful to separate traditional machine learning type models, which are making a probability of a repayment assessment or a likelihood to open a piece of mail, versus generative AI that's writing sentences and paragraphs or making images, right?
Arguably, those are very different. Yes.
and so what we saw in the sort of first wave of AI applications using machine learning to do things like credit underwriting and marketing is sort of an adaptation of traditional model risk management to a new process, which might have included more variables, different math to do the models. But it's essentially the same sort of thing. And most mature model risk management programs have a risk-based tier structure.
Okay.
So you have the highest risk models that require the most scrutiny. Those are things like the models that we use to decide whether you should get a home equity loan or a car loan, or to manage our balance sheet risk. So to offset credit losses. Those require the highest bar, the most scrutiny.
Okay.
Our model risk has to be able to replicate the model from the data. Make sure that it's actually matching what we said it was going to be. And so there's sort of a lot of scrutiny on those tier one models. Where AI models come into play, the large language models, the ChatGPTs, et cetera, we're not using them to make those types of decisions.
Okay.
We're not using them to tell us how much balance sheet to reserve for losses. We're using them to enhance our productivity. And so early on, we had discussions about how exactly we were going to allow people to use AI, because we saw the promise of the productivity gains. And we decided as long as the model output was not used directly in a business process, that there was a human in the loop, that there was some review happening, that a real decision had to be made by a live person, that would not qualify as in scope for model risk.
Okay.
It's a productivity use, just like the Zoom blur filter. Okay. You don't need model risk to tell you that on Zoom the blur is okay. right? Because it's not really impacting the business. So a lot of these kind of, a lot of what you have to do as you're adopting AI is figure out which use cases slot into which risk tiers and what level of scrutiny is required for each of those uses.
Yes. Yeah.
And, the answer can change when the end user isn't an expert.
Right.
So I'd hate to give a coding AI to my CEO to use. Well,
Yeah.
Maybe Tim would be pretty
Tim's
good
a pretty
at it.
smart guy.
He's pretty smart, but some of the other people, maybe not.
I would, even if I'm smart, I don't want it.
Well, and it's like, why would you be expected to review some code that the AI wrote?
Right.
You don't have that expertise. So you have to make sure that the user is also of the right caliber to be able to review the AI's output.
You almost that gets back into the issue with you need enough expertise and seniority to use AI as the tool and you can't get that expertise and seniority without not using AI as the tool or as a tutor, right?
Right. But it really does require, if you're going to manage the risk of hallucinations, of confabulations, of it making errors, you need someone on the other end who knows what they're looking for.
Totally. No, and the way that I've used AI in some of my research, so it's like a research assistant, right? And I always have to ask for the source of everything. I'm literally send me to the website. I can't look over the entire internet the way I guess Claude can, but I can't also take what you gave me. I need you to send me to the site that you got this information from.
Absolutely.
And to understand that that meets my threshold for trust but verify, which is our tenet as journalists.
Absolutely. I was going to say, you went to journalism school, you write down all the facts, and then you call up all the experts to verify the facts.
Exactly.
Right?
And then in the article, it's not enough for me to even just say, trust me. I put my sources in articles because I want, it's a value of mine that I should be fact checked by my sources. And that
absolutely
that builds transparency and trust between me and the reader and me and the information, right?
Maybe the journalists are the best AI.
We're the only people who should be allowed to use AI. Yeah, that's right.
I'm with you. That's pretty cool.
Oh no, I mean, I do think about the hallucinations, the fact checking it's been so instructive.
Right. People don't know.
It's a skill. It's a skill.
It is a skill. And you have to have your eyes open. And as the AI gets better, you find fewer and fewer issues, but they're still there. Well,
and the other thing too, as the AI gets better, you will have fewer issues, which means you have to be kind of more on guard.
Absolutely.
If I'm editing something that, let's say I was, for whatever reason, editing a J101 student's work, I'd probably find a lot of errors, and it's probably easier for me to find the errors than if I'm editing. At my old job, I used to have to proof the magazine, which meant that this piece had already gone through probably 2 editor checks. But things would always happen. And the one thing that would always happen was the quarter end. So the numbers would change. Every single number had to be rechecked. And if I was the first person to check something, I would actually put in the link. If I was like, hey, this number needs to change, I would put in the link where I found that change so someone else could go replicate my check.
Yeah.
And so it was just always very interesting to see what would you catch in proofing when you are the third or fourth person to read something, and you'd catch a lot of stuff. And you'd have to, and the thing, every time you caught something, you'd have to be even more on guard for the next thing. Cause you're well, now there's, if there's one update or one edit, there might be a second update or edit.
I'm totally with you. So one of the things that we worry about is as the AI gets better and better. So I told you about the information extraction agent that we built.
Yes,
that's very accurate.
Reads the papers.
Yeah, that reads all the papers and takes all the numbers out and gets them ready. Well, we put that in front of a reviewer. If the AI is so good, well, that reviewer might just fall asleep.
Yes.
Yes, so that's
a real problem.
how do we guard against sort of the complacency that sort of would happen? And one of the things that we've started to do is to inject bad data into just to make sure that we can tell that the reviewers are actually paying attention.
Yeah.
So it's really sort of important to be thoughtful about those human factors.
Yes.
Just going back to the software agents work that we did in the late 90s and 2000s. You're going to have this sort of mixture of responsibilities between the AI agent acting on behalf of the end user, and then the end user needing to be able to approve or to verify those actions are correct. And getting that right, I think, is really difficult.
It's honestly insane you're phishing these people. Like, you're using a phishing test to make sure.
Bit.
Yeah.
A little bit.
Hey, it works. Yeah. So, we're talking about AI usage in the business, at the institution level. But I know that maybe one of the reasons why banks may have hesitated to use AI in the past was the regulators' questions and attitudes, and maybe just not feeling like they were able to provide satisfactory responses, and didn't want to give didn't want to have that conversation if they weren't really ready for it. What kind of conversations are happening at the regulatory level now that bankers should be paying close attention to? And what advice do you have about how to have productive communications with their regulators?
Yeah, so I think the main thing is to demonstrate that you're taking the regulation seriously, right? That you're really sort of aware that you're going to move $100 million using this AI agent, and that you're not going to do it sort of flippantly. That you've done the testing up front, that you've checked to make sure that you have all the controls in place to make sure that you're not going to create financial risk or reputational risk. And quite frankly, that's difficult when you're talking about a chatbot where anybody can say anything to it, and you need to make sure that it always says something good back. So if you think about it for a second, like, how do you test that?
I don't know, manually do it and then compare it? I have no idea.
Right? You have to come up with thousands of variations of every way of saying anything.
Yes.
In order to convince yourself that that the AI isn't going to do the bad thing. So the testing burden on some of these systems is really high.
Sure.
And the more upfront work that you put into that testing, the better off you're going to be on the back end. Because even if something comes through, you can say, well, look, I spent all of this time. Here's my million test cases that I ran on this chatbot before we released it. And that demonstrate a level of diligence that I could be proud about. And so I think that's, to me, like, that's the key. Because the credit administration and the regulatory framework that we have today is relatively innovation friendly. And is encouraging of AI use, which is wonderful. But at the same time, we also have a lot at risk as institutions. So we need to make sure that we're managing that risk appropriately.
I think the other thing too, and I can't, maybe you would have a better idea of like what it was like when banks started using the internet more, or started using cell phones more, these types of technologies where they would have had to there would have been like maybe an adoption ramp up. And then also regulators have questions about maybe information security or, connectivity or the networks and things like that, or storage. And, this isn't the first time we've had these conversations. Obviously, AI is a completely different technology, but we have these conversations about technology with our regulators, period. Right? Like, we didn't start with computers. So what was that conversation like?
Yeah. And Fifth Third was proud of starting the first ATM network, multi-state ATM. Network. That was a big deal. And similarly for AI adoption in functions like underwriting, people were really nervous about about perceptions. So, sci-fi doesn't do us any favors by putting out all those dystopian short stories and Isaac Asimov novels that talk about the dystopia created with technologies. And so I think the first thing that comes to mind is, oh my gosh, the AI is going to take over and it's going to learn on its own and it's going to run amok. When in fact, we can freeze the AI models. We can make them replicable. We can make them controllable and transparent if we take the time to do so. So I think a lot of the first wave of AI, call it skepticism or fear, was driven by that perception. And so if you take the time to sort of sit people down and explain, well, no, actually, like, that's not what we're doing. We're doing this other thing that's much more controllable and manageable, that then the temperature starts to come down. And I think the other thing that happens is that if you have a user, an AI user like a bank, that really doesn't have the expertise inside to explain to the regulator in a credible way how everything is working and what testing was done and why it should be trusted, then you probably shouldn't be doing it.
I think that's realistic advice. And also, I always have to think like, you could learn. You know what I mean?
Right.
Sounds like that's where we start
Right.
with the learning.
Yeah, exactly right.
So, what advice do you have on executives to make the business case that the institution should be investing in AI capabilities or further capabilities, like expanding use cases, especially as we think about the related expenses and then other initiatives like data management and governance that kind of come with it, right? Like AI, we kind of hand waved about just use machine learning, just get all the data fixed, right? Like,
no, these things are not
real,
trivial,
right?
Yeah, it's not trivial. Putting time upfront into building the business case is super important because you need to know what's the pot of gold at the end of the rainbow that you're chasing, right? And oftentimes, actually, we find if you just take one use case at a time, you don't necessarily get enough benefit to hurdle the expense to build the solution or to buy it.
Sure.
And so you have to be a little bit clever about either collecting up a bunch of use cases that you can pull together and go address in one initiative, or focusing on where the big money pools are.
Okay.
And for us, a lot of that is in consumer lending and looking at how could we expand the number of people that we accept using existing processes and channels. Because if I could just switch from a traditional credit score to a machine learning underwriting model, a bunch of money just comes out. So that's a play that we could just make over and over and over again. It's difficult when you have an area that's new, where you've never really tried anything and nobody has any statistics to give you about how much more efficient it's going to be or how much more successful it's going to be because you used AI. And so there, it's important to sort of pick a series of bets that are measurable, have a plan to be able to measure them, do a focused time box pilot to get the measurement, and then sort of decide based on what you were able to see, is it worth going to the next step? So that's a lot of what we've been engaged in the last couple of years.
It's funny because in my previous role, I had written about why don't more banks measure ROI of their tech projects. So again, you just described something that makes total sense and is not in practice, like at 65% of institutions that took this survey that said that. And I get why, but like, I get why it's hard to quantify certain like man hours or quantify certain expenses, discrete expenses, or run tests and then extrapolate. But like, it does actually seem like that kind of skill set and that approach is really, really useful, especially again, as we think about these technological applications or changing some of the processes that we use. And adding more AI and shortening or cutting out paper or, maybe the amount of like checks that's, like the amount of time something takes and shortening that. And so it's, you just said like, just do it. And I know that, 65% of banks aren't doing it.
The issue is there's so many things on the IT agenda or on the bank's agenda that are must do's, right?
Right.
So you have, a lot of aging systems that you need to replace because they're going to go out of service life.
Yes.
Or you have a corporate event happen, like a merger. Like we just acquired a bank. So now we need to open up all these branches using our software and systems. That takes precedence.
The conversion, the onboarding, the new customers, right? Obviously, your little pilot test is not going to maybe be the priority that year. Right?
And so you just need to sort of recognize when you're doing these things that it's up against the whole rest of the agenda.
Totally.
And so by picking use cases or by picking opportunities that are really substantial, you can start to justify the funding of that initiative. So that's my advice, is to pick something that's going to really change the game.
So my final question for you is, what advice would you give to executives listening for the mindset to incorporate AI and use it within their institutions?
Yeah. So I think the first thing is just to be mindful that you're kind of painting a target. So make sure that you're documenting all of the things that you did to manage the risk. That's a piece of advice number one. Piece of advice number two, work to align all the stakeholders at the beginning.
Okay.
Because what you don't want is to start a project or start an initiative and then find out at the last minute that there's a detractor or that there's a big barrier that you didn't take into account. Like, I don't know, you're going to do a product recommender. You need to think about, like, are you inadvertently steering all the people to the wrong thing?
Sure.
So getting those all the objections on the table at the onset helps to then be able to manage them. And then third, really to pick something that's measurable and that will have a significant outcome. So you could say at the end of the day, I did all this work and it was worth it.
Right. Well, Jay, thank you so much for your time today. I really enjoyed this conversation.
Thanks for having me.